Welcome everyone to today's webinar with Left Brain Professionals. Today the topic is Streamline Your Month-End and Year-End Processes. Very timely considering we are here at the start of a new year, so we're really glad you're here to join us. My name is Liz Brigson. It's a pleasure to be your host, and there's just a couple things I'd like to point out as we get started. First of all, hopefully you've had a chance to join us last year. Robert presented with us more than once per month last year and had a full 12-part series plus some add-on webinars during 2020. So definitely learned a lot. We're going to roll and build on that in 2021. And there's just, if you've joined us and you know we really like to make the webinars interactive, we use the GoToWebinar questions pane for live interaction. So we'd love for you to go out there, say hello so we can give you a warm welcome. And that way we know you're along for the ride. And if this is your first time for a Left Brain Professionals webinar, then we are equally glad that you found us and that you're here. Robert and his team have a full series planned for this whole year. So this is a perfect time to jump in and join us. You can download the handouts from today's presentation from the GoToWebinar control panel. They will be available for you from your Incoursa dashboard. We'll have an hour-and-a-half webinar for you today. That means we'll launch 7 poll questions. We'd love for you to answer all 7 polls. To earn CPE credit, you'll want to respond to at least a minimum of 5. For those who qualify, you can download your CPE certificate from your Incoursa dashboard an hour after the program concludes. And as always, if you have any questions about the webinar, CPE credit, or anything logistical, you can contact us at support@incoursa.com. Well, it's a pleasure to welcome back Robert Jones. Robert is a government contracts and accounting expert. He is the founder of Left Brain Professionals, and he has a really, really neat professional background that brings him to this point where he works with accounting firms and government contractors to help them strengthen their controllership, strengthen their contracts, improve profit. And what you can see right here really speaks to this background for Robert. He is an instructor and a speaker now. Previously, he's been a defense contracts manager, he's been a controller, he's led business management, compliance, operations, and he has a master's of accountancy. So he brings a great background to speak on these topics today. So Robert, welcome back, Happy New Year, and I'll turn things over to you.
Yes, thank you for the opportunity to be back. Happy New Year to everyone. This is our first webinar for 2021, and as Liz said, we've already got a full editorial calendar lined up for you. I'll give you a preview right now. Next month, we're going to be talking about the PPP loan forgiveness and special considerations for government contractors. You know that the PPP loan the program has been extended into 2021, so there are opportunities out there for companies. If you didn't get in the first round, you still have an opportunity to get your first funding from it. If you received funding the first time, there may be an opportunity for you to get a second round of funding. And again, next month in February, we will take a deeper dive into PPP loan forgiveness and those special considerations for government contractors. Today, we're here to talk about streamlining your month-end or year-end accounting process. Right, obviously a timely topic here in January as most companies are closing out their fiscal year that ended December 31st. Quick intro about us as a firm, if you have not participated with us before. I do like to describe us as a boutique accounting firm in that we only work with government contractors. We practice primarily accounting system design, implementation, and audit support. Consulting is a big portion of our business, though we did recently launch some outsourced accounting. So if you're looking for monthly accounting support packages for government contractors, contact us and we'll be happy to chat about those things. Some of the stuff that we get involved with, helping clients achieve an adequate or an approved accounting system. A lot of work with DCAA, DCMA audits, indirect rates, incurred cost proposals, and strategic pricing. A couple of my other colleagues here you see on the screen, Melissa and Steve. And without further ado, let's get into today's topic. Our learning objectives include you should be able to develop a comprehensive checklist with responsible parties and due dates, design templates for common or repeated tasks, categorize tasks as pre-closing, closing, and post-closing, and work to eliminate wasted time, steps, forms, routings, etc. So as we talk about today, let me give you a little preview of what we're going to get into. When we look at any kind of period end closing, again, whether it's monthly, quarterly, an annual process, we're looking for ways to streamline that, right? To be faster, to be more efficient, to get meaningful information into the hands of owners and managers so that they can make informed decisions, right, with that data. Obviously, at year end, we're also looking at things like tax reporting, right, which is a big factor that comes into play and puts a time crunch. But we really should be concerned about the timing of our close throughout the year, whether it's a quarter end, or a year end. And to that effect, our first poll question is to get a sense of where you are as an organization right now.
All right, that sounds great. So let's go ahead with our first poll. We'll get that launched, and the question is, how long does it take you to perform month-end close? And I think this is a fun question, because I've always kind of thought maybe there was a best practice and a standard, and I suppose there's probably an average, but an answer that I've heard when I've asked that question is it actually depends a lot on the company, the size, the team. But how would you respond to that, Robert? Do you find that for government contractors, there tends to be a best or a better practice?
Well, I can't say necessarily specifically for government contractors, but to your point about, the size and complexity of the organization, whether they're publicly traded or family owned. And the funny thing is, it seems to be inverse into what you might think, right? You might think that a large, big company with millions of, dollars in revenue every month and potentially hundreds or thousands of employees, that, man, it must take them weeks, right, in order to close. And in fact, what we find is that obviously your publicly traded companies and your larger companies that have outside investors, angel investors, VCs that are involved, they want that information and they want it ASAP. And I can tell you, having worked for a publicly traded company before, we had to have our books finalized by noon of the third business day of the following month, right? So we didn't have any time to dilly-dally around. And the interesting thing on the other end of the spectrum is that my experience with a lot of small companies, especially family-owned companies, no outside investors, while the owners are often screaming to get the information, they're sometimes 10 days, 2 weeks or more before those books are being closed.
Yeah, we'll go ahead and close the poll and take a look. That is really similar to my experience too, Robert, with public companies and also with a large corporation I worked with. Like, we were getting subsidiary information by like day 2 or 3 and closing by 5. And then I worked with a smaller company that was closing and sending off reports to the parent company on day 10. So I think that is, you're right, definitely an inverse relationship. And we're seeing a majority of the audience is closing within 3 to 7 days. And then we have about, 50, another 45% over 7 days. And then we have a small subset of the audience, the 13 percenters there, who are closing in less than 3 days. So that's really cool to see how that splits out with our audience today. So thanks everyone for responding.
Yeah, and hopefully, my goal for today is that you walk away, regardless of where you are in that first poll, that you walk away with some information that can help you, shave off some time, even if it's, 3 or 4 hours. Great. For those of you that are in the 7 to 10 days or more, maybe we can shave days off of your processing time. All right. So our first learning objective was about developing a comprehensive checklist with responsible parties and due dates. Right, those responsible parties and due dates are helpful, right? It gives us guidance. We know who's doing it. It's not just some random item on a checklist that's got to be done. There is now accountability, right, to make sure that those items are complete. Period checklist. As I think probably most everybody on the call or on our webinar today, I should say, knows that, we have things that need to be done monthly, quarterly, and annually. right? Monthly we might have things like a state sales tax, right? Oftentimes those things have to be submitted monthly, and obviously your financial statements and other items. On a quarterly basis, our payroll tax returns are, one of the big ones. You may have commissions or bonuses or other things potentially that fall into the quarterly category. And then obviously we have the annual, right? We got to close out the year. We got to get that information to our tax partners, right, so that they can prepare the tax returns and move forward from there. My caution here, when you are developing checklists on listing out those items, particularly for the year end, we only perform those once a year, right? So oftentimes we're not experts at those things. Those monthly tasks, right? We've done them 12 times in a year. And if you're new to a company or new to a task on a monthly basis, right, usually within 2 to 3 months, right, we get those down pretty good, right, because we're practicing those on a regular basis. The quarterly, a little less so, right? An annual, unless you've been with the business sometimes 2, 3, 4 years, you're not really good at those year-end types of things. So make sure that those checklists have clear information about how to perform those tasks. I've taken, and you're going to see as we walk through here today, I've kind of taken the tasks and I've categorized them in different ways. On the previous slide, we talked about categorizing them in terms of the calendar, monthly, quarterly, and annually. Now I want you to look at this in terms of things like customers, vendors, and employees. And walk through these lists to, kind of brainstorm and bring together all of the items, right? So if you don't have checklists, or even if you do have checklists, right, what a great time to go through and make sure that you're really doing everything that needs to be done. And a great way to do that, right, through a brainstorming session is say, okay, from a customer's perspective, what are the things that we need to do? Well, here I put December invoices because we're kind of talking about year end, but obviously I got to get the invoices out for the month, right? Whether that's for the month prior and whether I'm at the quarter end or the year end, I got to get invoices out to my customers. I need to do an AR reconciliation, right? I need to run the aged AR report and look at what's on there. Is there something that's outstanding, right? Do we have amounts? Hopefully you're doing this on a regular basis, right? But if we've got amounts that are on there that are 90 days, 120 days outstanding, right? That's usually a clear indicator that those accounts are going bad, right? And my ability to collect those has gone down significantly. Hopefully we're not waiting until they get to the 90 or 120 day mark before we start contacting the customer. But obviously when they do get to that point, we now need to make considerations for bad debt, potentially even, canceling business with the customer, some other factors that may come into play. So one, we want to look at, are we getting paid on time? And is the information there accurate, right? It may be the reason that something is lingering out there is that there's some kind of error in an invoice and the customer is not paying us due to that error. Or maybe they paid us and they short paid us because, again, some kind of error in the invoice. Maybe they were expecting a credit memo or something. Maybe somebody thinks, right, that the credit memo has been applied and it hasn't. There are things like that pop up. We often find that, we receive payments, they get applied to the wrong customer, they get applied to the wrong project. Those are the types of things that we can identify when we look at our AR reconciliation process. I already mentioned writing off bad debt. Nobody wants to have bad debt. Unfortunately, it's something that does happen. And it's something that we do have to get, that we have to get off the accounts receivable. We have external parties, even internal parties, but we have external parties that are oftentimes relying on our financial statements, and they need to be accurate, right? We can't have information on there, right, that somebody owes us money when they really don't, or when it's clear that it's not likely we're going to collect it, right? The debt is now 120 days past due, and it's probably pretty clear at this point we're never going to see that money. Our next category or grouping would be to look at vendors. What are the types of things that we need to do with vendors? We need W-9s, right? Here at year end, we're getting ready to send out those 1099s. make sure that you have accurate W-9s on file for all of your vendors. Now, this is an area that we see large businesses tend to be very good at. Larger companies tend to have more formal onboarding processes for their vendors, right? Those of you that have worked, as a vendor for a large company, oftentimes you get a stack of stuff. They got a vendor profile, they want the W-9, they got other stuff that they want from you before they'll even turn you on and give you a purchase order, right? They want all that stuff in their information or in their system. For smaller companies, oftentimes it's, hey, get a PO out to this person and let's move forward, right? And sometimes that other paperwork falls to the wayside. We got to make sure we get W-9s. I'll talk in terms today primarily for QuickBooks. We know obviously a lot of small and even medium-sized companies use QuickBooks. The concepts will apply to many other platforms, so don't be discouraged if you hear me mention QuickBooks. But in QuickBooks, as an example, on the vendor profile, you can attach documents. Great thing to do is get your W-9, actually attach it to the vendor profile. We know that attachment functionality works in other accounting systems. So if you have that opportunity, attach it there, right? It's a great way then that somebody can easily, open vendor cards, look at them and see, yes, I have a current W-9, I can check that off the list and move forward. Getting the 1099s out, right? So we got to make sure that we actually now send those to the appropriate people. Again, in terms of QuickBooks, there's a couple of things that you need to do with your W-9s and 1099s. In QuickBooks, you want to go to that vendor profile, and if it is somebody that does indeed need to get a 1099, make sure that you check the box, make sure you put the tax ID number in there. And then behind the scenes in the QuickBooks setup, the other thing you need to do is actually identify the GL accounts that are eligible for 1099s and where those items fall in. Right, so when we look at the 1099, we know that non-employment compensation, right, that box 1 is common for many people. But there are other reasons that we do, report stuff on the 1099, including rent, royalties, and some other items. So make sure that you have the proper GL accounts set up, and that in your 1099 configuration, you've selected the appropriate GL accounts, mapped them to the appropriate boxes or items in the 1099, and that you have your vendors set up right with the 1099 checkbox and their tax ID. And all of that combined, again, in the QuickBooks environment, though very similar in most other accounting systems, is what helps to ensure that you are creating and delivering complete and accurate 1099 information to your vendors. Similar to customers, I need to look at my accounts payable kind of stuff. One, I'm going to have an accounts payable accrual, right? So at the end of the year, or again, at the end of any period, I've oftentimes received something in, but I haven't actually received the invoice, right? We have that good old fashioned received not yet invoice account. Hopefully you've got that on your books. Really is important for inventory, right? That's oftentimes where we see it. Sometimes for service companies, because they don't have inventory, they kind of forget about the AP accrual, but it's just as important for service companies, right? We can still receive supplies in, we might receive fixed assets, we can receive services as an example, where the services were delivered in the period, but we haven't yet received the invoice. I'm actually dealing with that right now with our firm and some services we received, and we're trying to close our books. And I realized, hey, wait a minute, there was a chunk of money here that I was expecting to see on the books. It's not there. I had to contact the vendor the other day and say, you did the work, but I need the invoice. One, because I got to get it in my taxes, right? I want to make sure that that's correct. So they're a little delayed in getting the stuff to me. But we had those expenses in 2020, and I want to make sure that they're reported properly in 2020. And the way to do that is through the AP accrual. A polling question for us, please, Liz.
Okay, that sounds good. So this brings us to poll number 2. Great reminders about year-end, following up with AR and AP too, by the way. So period checklist should be done. how frequently? Weekly, monthly, quarterly, or both B and C? We'll give this about 5 or 10 more seconds. Checklists are definitely a topic I think we hear a decent amount about, and they probably can't be over accentuated because they are so helpful. It's nice to know you have a complete list in front of you so that you don't miss anything, because no one likes surprises when it comes to month-end close.
And the one thing that I'll say about checklists in general is know why the item is on your checklist, right? Particularly if you're new to the organization or you're new to the department. If the checklist is there and you see something and you say, I don't, some things are pretty clear, right? Again, quarterly, we know we got to do payroll taxes, pretty straightforward. But if you see something on the checklist or in general, right, ask a question, know why you're doing that task, because it's possible that something got carried over from an old process, from an old system, as an example, right? And maybe that item no longer needs to be there. And the answer here, this is one of those that you need to choose the best answer. And the best answer is D, delta, both B and C, right? Monthly and quarterly are primarily what we have talked about. Certainly weekly might apply to some companies, but we're talking today primarily monthly and quarterly. All right, carrying on in our content, our next category to look at are employees, right? What are the employee-related things that I need to do on a period basis? Similar to my AP accrual, I need to do a payroll accrual. This is something that, again, we find many small companies tend to overlook. Even if they are an accrual-based company, we still find that many clients record payroll expenses when they're paid. So their books might otherwise be accrual-based, but we find that, for whatever reason, they get in the habit of recording payroll on a cash basis. Well, that's not exactly correct, right? We got to align, we got to match the expenses with the period. And I would say that unless you are a monthly or a semi-monthly payroll payer, then you're always going to have some kind of payroll accrual at the end of the period, right? There's going to be a few days, and on average, it seems to be about 3 to 5 days, right? At the end of the month, that kind of split that pay period, and I've got to do an accrual to make sure that my payroll expense is in the proper period. Bonuses. Many companies pay bonuses on a monthly or a quarterly basis. Make sure that you put that in the proper category in terms of timing. I will mention and talk about that later. Some of the stuff that we talk about today, I may put it in a monthly or a quarterly or an annual bucket. And you might say, well, that doesn't make sense for my business. And that's okay, and that's true. There are certainly situations where something needs to be adjusted because of, again, something in your business. If you pay bonuses quarterly, then I would put that on the quarterly checklist as an example. Commissions kind of fall in line with bonuses. We may have commissions that are payable to either internal or external salespeople, right? So we may have an external firm that we use. We may have internal salespeople that earn commissions in addition to a salary. Really important that we get the commissions, right? The cost of the sale aligned with the revenue of that sale. So we want to make sure that we're calculating that on a monthly basis, right? And I'll just pause there and say that commissions, and again, the other thing to keep in mind is you would have to know how your commission system is structured. Many people pay commissions when the product is shipped and invoiced, or when the service is delivered and invoiced. You may have a commission system where you pay a commission when the sale is closed, not necessarily when it's invoiced. Typically don't see that, but again, you'll just need to make sure that you understand how those commissions are, what your policy is, so that they are recorded properly in your books. Payroll taxes, again, something here that's related to employees. W-2s, it's that time of year We use Paylocity for our payroll provider and who we recommend to our clients. I've been receiving email notifications, I think since sometime in November, saying, please log in, double check all your employee settings, make sure you've got addresses, that everybody's in there correctly. You can preview I think the W-2s for us are finalized, but they kept saying, hey, it's in preview mode, make sure everything's in there, double check the addresses, get everything good, so that, when they lock it and say, we're done processing W-2s, then everything's going to go to the right place. One of the things to look for there are any terminated employees through the year. Make sure you have an updated address for any of those terminated employees so that it gets mailed to the right place. If you're using a digital service, most of our payroll providers allow us to download. Make sure that terminated employees still have the ability to log in and download. We've seen situations where some payroll providers, as soon as you terminate the employee, it locks them out of being able to download. So you're going to want to make sure that you provide access to those W-2s for the employees. Retirement and profit sharing. Related but different items, right? Typically retirement, we may make contributions on a monthly or a quarterly basis. Again, you got to know the details of your plan and when that match is calculated, and you'll want to, record that appropriately. Profit sharing, obviously, at the end of the year, we can't calculate profit sharing until we've, otherwise closed the books and we know what the profit is, so that we, can give that information to ownership and managers so they can make those decisions. PTO accrual and reconciliation. A couple of items here. We need to, when we're talking about the PTO accrual and reconciliation, we need to talk about the hours perspective and the dollars perspective. So the hours perspective is, right, making sure that, we do some reconciliation to say, here's the list of employees, here's the hours that they had at the beginning of the year, this is the hours they should have earned throughout the year, these are the hours that were recorded as used, here's the ending balance, does that match what's in the system? Now, as long as you've done everything in the same system, there may not be much to reconcile. What we find is that some companies will track PTO in one tool. So for example, they may track and record PTO in a timekeeping tool, but they report the balance of PTO on a payroll, like on a pay stub. And those are two different systems, and they're uploading and sharing information between those systems. Well, obviously what can happen is, something could be lost in the translation of uploading a file. You could have a situation where payroll was created, an adjustment was later made to timekeeping, right? Somebody found an error, but maybe payroll wasn't updated. So particularly if you have two different systems where you're recording PTO and tracking it one way, but you're reporting it, and again, keep in mind, many companies do report PTO on the pay stub or on the paycheck. If you're doing that, make sure that those systems are in line, again, from an hours perspective. Now, the dollars perspective is the proper treatment of what's expensed on the income statement and what's listed as a liability on the balance sheet. As a reminder, if you have a PTO policy and your employees are earning that PTO, such as they're earning, a percent, maybe they earn something per hour worked, maybe they earn something per pay period, whatever your policy is on the earning of that, when the employee has earned it, it is an expense to the business, right? So it's not an expense when it's used, it's an expense when it's earned. So that means every month I have, PTO expense on my books, and at the same time I have to put that on the balance sheet, right, as a liability that I owe my employees that, right? And then when they, if somebody terminates throughout the year, and assuming they terminate without cause that would otherwise, so that they could still take their PTO with them when they leave, right? We have to pay that out. And that's why it needs to be on the balance sheet. The dollars reconciliation here is to make sure that the dollars I have on the balance sheet and the expense account actually align with the hours and the employee pay rates. So what I need to do, hopefully I'm doing this on a monthly or a quarterly basis, but I need a list of my employees. I need a list of their PTO balance. I need their current pay rate. I'm going to take their hourly balance times their pay rate, and that's going to give me a dollar value for the liability for that individual employee as I go across the line. And then I'm going to go to the bottom of that column and I'm going to total and say this is my total liability, right, for all of my employees from a dollars perspective that should be on the balance sheet. The dollars will get out of whack because we give raises throughout the year, right? And whether you're, however you do that, whether you do all of your raises at once or whether they're staggered, doesn't matter. But if you don't update your PTO accrual process and the expense and reconciliation, then you're going to be in a situation where employees are earning more money than what their PTO accrual is showing. And so you're going to be out of whack in your liability. Double check again, what we're talking about here are both the hours and the dollars perspective of PTO. In the general ledger, we have various balance sheet reconciliations. I'm not going to go into detail of all of those today, but we look at things like fixed assets, like our PTO, prepaid expenses, other items like that. We have various accruals and journal entries. We've talked about the PTO accrual, the AP accrual. Maybe you have a warranty expense. If you're selling a product and you provide a warranty on that, that was one of the things I had to do in my past. We had to look at, we calculated hours as a percentage of sales, and we had this worksheet that we went through and looked at prior expenses for like a rolling, I don't even remember, maybe 18-month or 24-month period, and we figured out what our accrual was supposed to be, right? That's not a real expense at the moment, right? Because I haven't actually incurred the warranty expense, but I do have to put the accrual on the books. I have other journal entries that I do each period. Depreciation is a great example of that. Inventory items, and we'll talk a little bit about ABC inventory here in a little bit. Fixed assets. Fixed assets need to be reconciled, right? Did we buy any assets in the period? Did we abandon any assets? Did we trade in or sell assets as part of acquiring something new, right? If we bought a new forklift as an example, maybe we traded in an old forklift. Maybe the old forklift was a piece of junk, right? And the wheels fell off of it and the motor fell off and, we couldn't use it anymore, which is why we bought a new one. That's okay. We need to get the old one off of the books. There are a few reasons to make sure that our fixed assets are accurate. One, right, they need to be accurate on the balance sheet. That's our goal as accountants, is to make sure that what's on the financial statements is correct. So they need to be accurate on there. We need to make sure that the depreciation we're calculating is accurate, right? That's based on those assets. If there's been a change, in something that maybe the life of that asset or something has happened. Maybe we extended the life of an asset because we did some major upgrades to it, right? So that's something to take into consideration. The other is for insurance purposes. Sometimes people forget about the fact that, we do have insurance on the building, on our equipment, on various things. And so every year, hopefully you're doing a call or something with your insurance broker, right, to review your policies and your coverage. And one of the things you want to make sure is that you've got enough insurance coverage for all of your fixed assets. How else are you going to know that than by, right, updating the fixed asset listing? The other thing with fixed assets here, keep in mind that typically talk about fixed assets in general and not necessarily depreciable assets. So depending on what your depreciation threshold is for your organization, for small companies, we do have the $2,500 de minimis rule from the IRS for depreciating assets. So anything under $2,500, we can expense for tax purposes and otherwise for book purposes. Anything over $2,500 would be depreciated unless you have a different capitalization policy. Make sure that you do have a good written policy for whatever that capitalization is. And again, keep in mind that your fixed assets may include, for internal tracking purposes, Things like laptops, right? We can buy a lot of laptops and other items for less than the $2,500 threshold or whatever your threshold is. We're going to expense those items in the period, but it is still a fixed asset for the business for tracking purposes. Most of your fixed asset programs will allow you to identify that an item is just being tracked or it's being tracked and depreciated. With that comes depreciation, right? That's one of the things that we will need to calculate each month on the books. And in order for that to be accurate, we need to make sure that we know if there were any additions or other changes to the fixed assets. Prepaid expenses. This is a big one for year end here. Now, arguably, we should be putting, fixed assets, or I'm sorry, prepaid expenses on the books and amortizing that each month throughout the year. I get a little less concerned about that for my small, companies, that are family owned or there's only a couple of owners. There's no outside owners. There's no formal reporting. I at least try to get the prepaid expenses into the proper years. So if they have something, for example, that they paid July 1st, right, and 6 months of that expense is going to be in 2020 and 6 months of the expense is going to be in 2021, at least try to get it, split in two. Yes, ideally we should be, putting it on there and doing, 12ths for the month. But that's one of those, I pick my battles and choose where I can. Prepaid expenses, we take the general guidance. We practice this internally. We provide this guidance to our clients to have a prepaid expense threshold that aligns with your fixed asset capitalization threshold. It's easy to align those. It's a dollar value that's easy for everybody to remember. So for example, let's say you have a $5,000 threshold for capitalization of assets, fixed assets, then we say $5,000 threshold for prepaid expenses. Anything less than $5,000 is just treated as a period expense. Anything over $5,000 is actually put on the balance sheet as a prepaid expense and amortized appropriately. Now, in your accounting system itself, so here we're talking about the software apps, cloud services, for example, that you use. Lock the period. For those of you that are on advanced platforms, locking the period is pretty standard and comes with the territory. Oftentimes it's even set up to automatically lock, right? You define your users in the system. You have admins and accounting people, and then you have general users. Many of those advanced systems will be set up that, normal system users, the system locks for them at the end of the period. Now, the next period is open, right? So they can continue on and they don't necessarily notice anything, but we lock them from being able to make any changes prior, right, to that date. In QuickBooks, that's something that's a manual process. You actually need to go into your settings and lock the period and put a password on there. Now, the password then allows somebody who actually has the password, it'll pop up and say, hey, you're about to make a change in a prior period. Are you sure you want to do this? And if you are sure, then you need to enter the password, right? And that's okay. For the accountants out there, right, there are reasons why we need to go in and make prior period adjustments. We're doing those journal entries or we're doing some other stuff, but we want to make sure that we block the average user from being able to come in and make any unnecessary changes to the data. Some of your advanced accounting systems actually require you to roll the year. I remember this being a big deal in a couple of accounting systems that I worked in, right? That not only did you lock the period and do some other stuff, but there was a process to roll the year where you zeroed out all the income statement accounts and everything, did what it was supposed to do, went to retained earnings, cleaned out everything. Some systems, again, like QuickBooks, that's a more automatic, right? January 1st or February 1st as an example, right? If I look in that month, it's already doing what it's supposed to do. From a year perspective in QuickBooks, it's already zeroed everything out because I've told it when my date is, and it starts all over. Some systems, you may still have that process of rolling the year. Both of those things of locking the period and rolling the year, and it goes back to one of my early comments. We don't do those very often, and so make sure that you know how to do them, that you do them correctly. Again, in the case of QuickBooks, if you're locking the period, make sure you save that password. There are ways to, if you are an admin, there are some ways to reset the password and do stuff, but make sure that you save that password and it's in a place that the appropriate people that need it can get access to the password. Year end, not necessarily in the middle of a year end, but as part of your overall year end process, great opportunity and time to review and update policies and procedures. For those of you that were with us last year, sometime in the middle of the year, we had a webinar on policies and procedures. We talk about the various things that you need to do. Things happen throughout the year. We may change software or apps. We may change a payroll provider. Some other things that come into play with policies and procedures are thresholds, due dates, some various things like that we might need to go in and make updates to the policies and procedures. Financial statements, another category of items to look at. Again, all of what we're talking about here are still the various categories of some tasks and items that we need to consider when preparing our checklists. For government contractors, here are some specific things to look at. Calculating those indirect rates, right, as part of the financial statement process. Preparing job status reports, not necessarily unique to government contractors, but we know for government contractors, right, job status reports, job cost reports are critical items. It's one of the key requirements of the SF 1408 accounting system survey. In order to have an adequate or an approved accounting system for government contracts, you have to be able to generate job status reports. Those job status reports, again, we did a full webinar, I think in November of 2020 on that. Couple of the items that are key there is having all of your cost elements, which are labor, travel, materials, ODCs, and subcontractors. But then you have to have that spot. If you were with us and remember, we talked about having applied fringe, applied overhead, applied G&A. Well, the only way that I can really finalize those job status reports or job cost reports, whatever your system calls them, I have to finish calculating my indirect rates, then I can run those job status reports. With that, Liz, another polling question, please.
All right, that sounds good. So we'll go ahead and launch our third poll question. The question this time is about accruals and journal entries. So question is, are accruals and journal entries, which checklist are they a part of? Looks like we have a leading answer. So that's good. Let's go ahead and leave this open for about 5 more seconds here. Responses are coming in quickly, which means we can cover more information and take some more questions when we get to the end. So thanks everyone for being so responsive. All right, we'll close this down here.
All right, and the correct answer here is C, Charlie, for general ledger. Right, when we were grouping these and talked about accruals and journal entries, that was under the general ledger. And just a reminder, as Liz was hinting at, if you've got some questions, get them in the Q&A panel. We will have some time at the end of today's webinar to dive into those questions. All right, our next learning objective was designing templates for common or repeated tasks. Journal entries, right? Oftentimes we're doing the same journal entries every month, new information in them, have a template. Now, I've seen templates created a couple of ways. Some accounting systems will allow you to actually create a template in the system. I know that Dynamics Nav, as an example, we have a couple of clients that are on Dynamics Nav, and I know that you can create and save templates. Wonderful time saver, right? Because I can, especially for those larger, more complex journal entries, I can build my template, I get the proper account numbers in there, and then all I have to do is enter the updated amounts, right, for this month. So that's what this is designed to do. If you're working in a system that maybe doesn't let you save templates in the system, create templates in Excel, right? Many of us, that's probably what some of us are still doing. QuickBooks, and actually I'm not sure how QuickBooks handles templates. I have to go look at that question to ask myself at the moment. But Excel, again, a great way we can build templates. Now, a couple of pointers or ideas on creating, well, I should say using Excel in general, whether you're using templates or you're doing other calculations for your period closing process in Excel. So one is that you could have one Excel workbook per month, and within that workbook, you have a tab for each of the different items. So you could have an AP accrual tab, an AR accrual tab, or a PTO accrual tab, whatever those journal entries or accruals are. You could have one book per month with a tab for each of the items. That's one way to do it. I kind of like that approach because then I have one workbook to work in, and when it comes to providing backup and keeping a copy of my backup with my financial statements, then I have one thing to attach. You may say, oh, we have a PTO accrual workbook as an example, and there's a tab for each month in that workbook. Nothing wrong necessarily with either approach. Just giving you a couple of pointers again for ideas of maybe how to consider building your stuff. I like the one workbook approach because even if I have to open up the previous workbook to say, wait a minute, what did I do last month, right? That's oftentimes why we do one workbook for PTO or accrual and then I got a tab by month. I can just go back to the other tab. But if I do the one workbook approach, I can do the same thing. I just open last month's workbook and I can see all of my other tabs there. And then I've got my other tabs open right here in my second workbook. Depreciation, right? Depreciation usually pretty straightforward, even if I've got multiple accounts, right? Because you may have depreciation for the building, depreciation for manufacturing equipment, depreciation for engineering equipment as an example, right? You're charging those to different GL accounts or different departments. Oftentimes, again, for many small businesses, our depreciation number doesn't change much throughout the year. We see many small businesses, they don't buy and sell a lot of fixed asset stuff. They can calculate depreciation once for the year, and apply it throughout the year and do a reconciliation at the end of the year. Labor distribution. This is one of the things for government contractors, one of the items that jumps out. Again, we did a timekeeping and labor distribution webinar, maybe in the October timeframe, something last year. Very critical and key for government contractors. You may recall that we talked about that labor distribution is the conversion of hours from the timekeeping system into dollars for the general ledger. Now, those of you out there that are in commercial or otherwise non-government contract accounting, many of you probably have a single salaries and wages account. In the non-government contracting world, that's okay. In the government contracting world, that's not okay. If you don't know what I'm talking about there, again, we've done some other stuff in the past. I think that's actually in one of the self-studies out there. We talk about the need to have direct labor as an example, overhead labor, G&A labor, and it's got to be broken out. And the way that we do that is through the process of labor distribution. I take the information from my timekeeping system and I convert that into dollars and then take those dollars and spread them out in my general ledger. Now, develop a schedule of tasks. Here, part of my recommendation is that balance sheet reconciliations should be on some kind of rolling schedule. For example, when we talk about bank and credit card, where hopefully we're reconciling those every month. My fixed assets, as an example, is going to depend. Now, we're going to give you some examples on the screen. Just a reminder that, look at your organization and adjust appropriately. So when you see the chart here, you look under the annual column as an example, you see fixed assets. I've got the little asterisk there that says you might need to adjust that. Again, for many small businesses that have very few fixed asset transactions, doing a reconciliation of those on an annual basis is probably sufficient. If you're the kind of organization that's buying and selling stuff every month, then you probably need to slide that over and put it into the monthly category for your business. The idea is that and similar to inventory, which we can talk about specifically, you're touching all of these items throughout the year, that at some point throughout the year, we've actually reconciled everything on the balance sheet. And some of those items we will have reconciled multiple times because we've either reconciled them monthly or quarterly. But at the end of the year, I have reconciled everything on my balance sheet. Inventory is a similar thing within itself, right? So you should be, if you have inventory, you should be physically touching everything in that inventory at least once a year. If you've got a good ABC counting policy, and if you don't know what that is, look it up or contact us. We can talk to you about it. Right, but that's where we assign values and cycle counting frequencies to our inventory. You should be touching every item at least once a year. Many of you that have an external CPA for tax purposes, you'll find that even if you have a good internal inventory process, they may bring in somebody outside to count inventory maybe once a year, oftentimes at least every 2 years, right? They want somebody from the outside to come in and physically count the inventory for you. So again, that they have a solid comfort in those numbers. Talked about the inventory here with ABC counting plan, fixed assets. We mentioned just make sure that you put these items in the appropriate categories for you. Prepaid expenses falls in line with the others, right? For small businesses that maybe only have 2 or 3 items that fall into the prepaid expense category, maybe once a year is okay. If you're an organization that's got 52 prepaid expenses and you got a whole working list of them, you might need to reconcile that stuff every month. Oh, the last item there, sorry, let me back up before we do that poll question. The last item there, and we'll talk some more about this with the timing of stuff. The focus is that these reconciliations and all the items that we talk about occur as part of the period closing, in general. And in a moment after the poll question, we're going to start to talk about actually putting them into pre-closing, closing, and post-closing, and looking at how you can optimize your process that way. But with that, Liz, another polling question, please.
All right, so our next polling question is up on your screen. Which is a monthly balance sheet reconciliation?
And this one is admittedly probably falls in the category of there's no wrong answer. Because as I said, some of you might say, well, hey, we do this monthly, you know, or somebody else says, well, that one's only quarterly for me. So I don't know that there's a right or wrong answer necessarily for this polling question.
I think there's probably a clear answer, and we're seeing this from the audience too, that one is more right, if that's a grammatically correct phrase. And the other is, you know, I think what you've done here though is you've taken 3 income statement accounts that could potentially be accruals and then 1 balance sheet account. So I think we have an answer where we're always going to have one answer for sure. And then the others are probably, like you said, dependent upon the company and the situation. So thanks to everyone for responding. Let's take a quick look. And we are seeing more than half the audience saying inventory, which is what I would say is the response that on a monthly basis should always be right. And then for these other accounts, it probably depends a lot on the company.
Yeah, and actually I think the correct answer when we put this together is A for commissions, because remember I talked about that we have commissions are something that are usually tied right to revenue in the month, right? So we want to make sure that they are, you know, in there correctly. Again, all of these really are correct, right? We want to make sure that we've got everything in the correct month, but payroll taxes we typically talk about on a quarterly basis. Bonus, many companies pay on a quarterly basis. Yeah, it's hard to say that one of these is right or wrong.
Good deal. Well, I can see maybe we had a little bit of groupthink going on with inventory, but an excellent question, an excellent poll question, just to like recap the key theme and the point that you were making.
Yep. All right, now let's get into how do we really begin to optimize the whole process, right? So hopefully what you can see in the first two learning objectives are that we kind of brainstormed what needed to happen. What are all the possible things that I would need to do, right, within the accounting close process? We talked about then, how often do I need to do them, right? Do they fall in a monthly, quarterly, or annual bucket? And now we start to talk about when actually in the closing process do they need to occur. So one of the things that I saw, and I'm glad that I was able to go through this kind of in hindsight, right? I really have a better appreciation for it. One of my previous employers, we were in that situation where we were probably, I don't know, we were somewhere in that 7 to 10 day range, I think, of closing the books. We had been acquired by a public company, and so there was pressure on us to improve our reporting up the chain, right, and get them information. And that's where we eventually had to get to that, having the numbers sent up by noon of the third business day. Now, there was some additional reporting and a few other things, obviously, that would happen after that, but we had to have, otherwise, the numbers to them by noon of the third business day. And so we brought in a consultant. We did a lot of stuff that we're talking about here today. And one of the things that we began to identify was that we were waiting until the beginning of the next month to start the closing process. And some of you might say, well, duh, that's obvious, right? We can't close until the month is ended. However, there are some of the tasks that simply need to occur that don't necessarily require you waiting until the end of the month. So there's some items that can be actually pulled into the prior month, right? That last week of the month. There's some things I could do and have done so that when when January 1st or February 1st or whatever it is comes, that first business day of the next month, I can actually dive into the things that are more time sensitive to me waiting for the end of the month. So let's look at those. Pre-closing. And again, all of this is around aligning stuff to improve our efficiency and the speed of closing. Depreciation, I can actually calculate pre-closing. Again, for companies that have, and post my journal entry, right? For companies that have few or no transactions from a fixed asset perspective in the month, or even if you do have some, and I know because this was one of mine that was always on my list, and I was responsible for all the fixed assets. Even if we had ongoing things, I knew by the 26th or so of the month, that's going to be done and it's going to be in service or it's not. And the other reality is that even if it goes into service on the last day of the month or 2 days of the month, I'm probably not going to get to count anything for depreciation anyway, right? So why not go ahead and do my depreciation? That's one task I can have done off the list, posted, ready to go before the end of the month. PTO is another one. PTO for most companies is based upon pay periods, right? We get a certain number of hours per pay period. So if that's the case, and again, if you are a bi-weekly or a weekly payer, again, this would be different in a monthly or a semi-monthly payer perspective. But if you're a bi-weekly payer, we know that those pay periods do not align with the month end, right? There's always going to be that gap. Well, after the last pay period in the month, right, and you've made that payroll, you could do your PTO accrual and reconciliation at that point. Similar thing for retirement, right? Our retirement contributions are based upon payroll, right, and the employees' contributions in that month. Once that final payroll is done, I could get the retirement thing done. AP and AR reconciliation. Again, there's nothing to say that I have to wait. This is not the accrual. This is the general reconciliation, right? Are there any problems in my AP? Is there something hanging out there where, again, payment got posted to the wrong thing, or there's a credit that was supposed to come through, or there was an item that was returned, something like that, right? That's causing some kind of hiccup in my AP report. I can still reconcile that before the end of the month. I don't have to wait to the beginning of the next month. Same thing with my AR reconciliation. Now let's talk about what I call the actual closing period. That would be like, the first of the month through whatever your goal is for the close of getting the books closed. I got to lock the period. whether that's automatic or something manual in the system, make sure the period is locked. Now I have to do my AP accrual itself, right? Because I have to know something could have shown up on the dock December 31st, right? I didn't get the invoice yet, but I still got to include it in the books for December. So those kinds of items, I absolutely have to wait until the end of the month. Payroll accrual, again, I can't actually do the pay. I can do my PTO reconciliation and accrual, but my payroll accrual for those last few days of the month, I can't do until, right, the last day of the month is ended and people have entered all of their time into the timekeeping system. Same thing for bonuses and commissions, right? If bonuses and commissions are based upon revenue that's recognized in the month and stuff that's shipped, if I have items that ship the last day or two of the month, right, I got to wait for those to be in order for me to calculate my bonus and commissions. Same thing for job cost reconciliation. This is, again, is a big one, key one for government contractors. We did that whole presentation last year on job costs. And one of the things that I have, and when we talked about this as well in the incurred cost proposal, we got to make sure that the job cost subledger reconciles to the general ledger. We're all familiar with that concept, right, with AP and AR as an example, right? Everything that's on the AR and the AP subledgers must tally up, right, and match what's on the general ledger. Same thing for my job cost ledger, right? I should be able to take and run all of my job cost reports, add them up, and so that my cost elements of labor, material, travel, ODCs, and subcontractors from a cost of goods sold or a direct cost perspective, those items that are listed on the job cost reports, I should be able to summarize and come to the same number that's on the general ledger. Now I go into my post-closing. Remember I said that my previous employer, we had to get the basic numbers up to everybody by noon of the third business day, but there are some things that come on after the fact. Things like rolling the year, as an example, at the end of the year, right? And let me pause here and say, in the case of year end, we usually cannot roll the year until after taxes are complete. So I lock 2020, I do my closing, I get the stuff to the CPA, my external tax CPA, but I can't actually roll the year until taxes are back, right? Because my tax CPA is likely going to have some adjustments that I need to make in that year. And if I roll the year, then oftentimes that locks the year completely and there's no way for me to go back. So just be careful of that. Again, in QuickBooks, it's not so much of an issue because you're only locking the period. There's no rolling the year perspective. But if you're in a system that actually does some kind of rolling the year, chances are when you do that, it truly locks out that prior year completely and there is no override. So make sure you understand what that process means for your system. Post-closing includes actually doing the financial statements. Right? I mean, I may have finished my numbers and shared, numbers with somebody as appropriate, but now I put together my actual financial statements with my notes and other kinds of things, right, to go to management as an example. Part of that is the final calculation of my indirect rates. I can't calculate indirect rates until all of the expenses are in, everything is reconciled, and I know that everything then on the income statement is accurate, and I can use that information to calculate my indirect rates. This is also the time for, and this really should apply to anybody, again, really critical for government contractors with those provisional billing rates that are out there. I may need to make budget or rate adjustments based upon my information. Again, this could be monthly, quarterly, or annual. We previously talked about in some other webinars, the importance for government contractors to monitor and manage those indirect rates, right? Those are the provisional billing rates that you're using. Well, it's twofold. It's the rates that you're using for proposal purposes, and it's the rates that you have negotiated for billing purposes for your contracts. You've got billing going on here, you've got actual stuff happening here. Hopefully what's happening, right, is if you had a good budget process and you're good at managing the budget and those rates, that you end up in a situation that what you're billing really does mirror, for the most part, what's happening in reality. We know you're never going to hit the target dead on, but you want to be close. If in your monitoring process you're seeing that, hey, we're billing higher or lower than what's really going on, then you have two options that you need to look at. Maybe you can and need to adjust the budget and get your spending and stuff back in line appropriate so that at the end of the year, you'll be back on target with what you're billing. Or if you're not able to make, there's no way that you could make enough changes to the budget, and sometimes that happens. Now you need to go out and actually go to your contracting officer and update the provisional billing rates on your contracts. So a couple of options there, but the only way to know what to do is by calculating, monitoring, and managing those indirect rates over time. Liz, another polling question here, please.
All right, right here, and let's get that poll question launched. So this is our 5th poll, and the poll question is, payroll accrual falls into which category? So would that be pre-closing, closing, post-closing, or none of the above? And now I feel like I need to be careful, Robert. I probably shouldn't jump ahead into the correct answer.
Well, this one I think does have a correct answer.
Well, we'll go ahead and leave this open for about 5 more seconds. All right, let's take a look. So it looks like over half the audience have responded closing. We have about a third of the audience, though, who have responded pre-closing. So let's just do a quick recap on this poll question.
Yeah, so the correct answer is B, Bravo, closing. So payroll, remember I said, I cannot accurately calculate my payroll accrual until the month is closed, right? If people are working the last day of the month, I need to know that, right, from my timekeeping system so that I can calculate an accurate payroll accrual. In the pre-closing, we talked about the PTO accrual, right,
Yes.
which I potentially could calculate if my pay period, I could look at my last pay period in the month. Let's say the pay period ended, and was paid on the 23rd as an example, right, and I'm not going to have another paycheck in that month, then I could potentially do my PTO accrual as a pre-closing task.
Excellent, great recap.
All right, let's continue on here. Now we need to figure out how do we eliminate any wasted time, steps, forms, routings that may be in our process. So evaluate the steps. Look at everything that you're doing. I said this earlier. I'll say it again here. Is every step necessary, and why? Don't be afraid to ask the question why. Have you carried over any unnecessary steps from an old system? So here's where I like to tell a quick little funny story that I learned from a consultant a number of years ago. And it basically goes like this. It's a holiday dinner. The family is over. Mom's in the kitchen preparing the ham. The daughter's in there. She's trying to carry on the tradition and teach her daughter about some of these things. They're preparing the ham. The mom gets the ham out. She slices both ends off the ham, puts it in the pan, puts it in the oven. And the daughter says, "Mom, why did you slice off both ends of the ham?" And she said, "I don't know. That's just the way I was taught to do it. Go ask your grandma. She's in the other room." Daughter goes in, asks Grandma, why do we slice off both ends of the ham? And she says, "I don't know. That's just the way I was taught to do it. That's what your great grandmother told me." And lo and behold, guess what? Great grandmother's in the house. Why don't you go ask her? So she goes and asks great grandma, why do we slice off both ends of the ham? And great grandma says, "Well, when I got started with my family, we lived in a tiny apartment with a tiny oven, and all I had was a tiny pan. And so when it came time to making the holiday ham, the only way I could make it fit in the pan and the oven was to slice off the ends." So the silly, funny story there is to tell you, why are you doing that? And as a consultant who does a lot of process improvement stuff, when somebody responds to me, "Well, that's the way we've always done it," I cringe, and I hope that you cringe. When you go through these checklists, when you go through any kind of process, when you're looking at trying to, increase efficiency, one, don't be afraid to ask why. You know, is there a regulatory reason? Is there a system hang up? Is there, you know, that's because the way the owner wants it, kind of an answer. And don't just accept the answer, right? So we'll say why, and somebody gives us an answer, and we go, okay. Challenge the answer and make sure you know really why you're doing it. Again, we oftentimes, what we find when we do a lot of process improvement stuff, especially when we implement new accounting systems and new software with people, is that they had a broken process before, and guess what? They hammered it and bastardized it to fit in the new system, and now they've just carried over bad habits. Evaluate the series of the steps. Part of that was what we previously talked about with the pre-closing, closing, and post-closing. Again, you know, we found that we were waiting until, you know, the first business day of the next month before we started anything on the checklist. And when we were challenged by the outside consultant and we walked through stuff and realized, hey, you know, there's some number of these items that we could actually get done before the end of the month, right? And that was one way that we effectively shaved time off of the closing process. Because now, arguably, the closing process still took, you know, 5 or 7 days or whatever the total was. But the key there was not so much that we reduced the processing time, though we did actually reduce overall processing time. The key was that we sped up when we were able to get the financial information to the owners and managers that they needed. When you're looking at the series of steps, question to ask is, are you waiting on someone or something else, and why? Right? Is there an input into the calculation that you're doing that's coming from somewhere else? So find out what's going on. You know, we talked again about the pre-closing, closing, post-closing. Are there multiple layers of reviews or approvals, and why? Can they be combined? Again, looking at and trying to find the efficiencies. Align steps to the order that the information is needed. Again, one of the things that we found, and this was a frustrating thing, I could still kind of hear one of my coworkers, she'd get so aggravated because she was working on something and she's like, I need this piece of information, and he's sitting there working on this other stuff, blah, 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 and he doesn't understand that I'm waiting on it. And I was like, but we found out, right, that we all just weren't on the same page. We didn't understand that somebody else was waiting on a piece of information for us. And so when we aligned the steps and realized this piece needs to be done before this piece, then it set expectations. One of the things you can do not only is list the steps to put them in order, but assign a specific time frame. So we took that checklist, reordered it, we put it into those categories. And so, for example, the closing section, the part that we would put into the actual, this is the closing period, we had items that we knew in order to meet the noon third business day deadline, these items had to be done by noon the first day. These items had to be done by the end of the first day. And in fact, the way we operated was those items that were designated as first day items, you don't get to go home until they're done, period. I mean, barring something really, really extreme, you know, if you get them done and we can be out of here by 5 o'clock on the first day, great. If we're running into problems and we're all here until 8 o'clock, you know, on the first day to get the first day items done, then that's what we have to do, because that's the only way we're going to be on track to meet the deadline that's been set before us. Evaluate the quality of the inputs. We're working with a client right now and helping them with some of their month-end process. It's been kind of interesting as we go through the process, interviewed different people, looked at process maps. One of the key things that kept coming up throughout from the accounting perspective of being able to close the month is we get a bunch of junk from other departments, and we spend half of our time in the month-end process cleaning up their errors. And some of you are probably snickering and smiling because it happens in your organization, right? Are you constantly fixing those errors from other departments? Why? One of the things that I ask, and one of the things that I've seen in this particular organization, there are some departments that are doing tasks that to me don't make sense. Like, I don't understand, why is that department performing that task? It seems like that should be handled by another department, or it should be part of the accounting process. Why are they doing it? Try to understand that process. have they been trained, right? Do we know that they have the proper information? Do you have a good feedback loop? That's one of the things, again, that we're seeing in this organization. They're getting better. But what was happening for a long time was other departments are doing work. It's an input, comes to accounting. Accounting sits and grumbles and gripes and complains, and as they're doing all the fixing and stuff. But there wasn't a good feedback loop to let the other department or the end users know the information you're entering is incorrect, right? You're causing other problems down the road, and now we've got to wait and spin our wheels at the end of the month fixing those things before we can actually close the month. With that, a polling question, please, Liz. I think this is number 6. Is that correct?
Yes, yep, that's correct. Number 6. The timing of tasks is critical to efficiency and speed of closing. Good reminder here. This would be a great time. We've seen some questions come in. We have Jenny on the line with us from Robert's team, and Jenny's going to help facilitate the Q&A at the end. So as you have questions coming in, we're going to be at that point here pretty soon. So feel free to get your questions in. We'll close this poll down and take a look at those results. 98% of you say true. So I think Jenny may have given us a poll question, Robert, that might be just a touch easier than many of the poll questions that you come up with.
Yeah, and yes, and good or bad, we have to give credit to Jenny. She helps me with a lot of the polling questions, and I jokingly say she should probably go write poll questions for the SAT, because she's very good at the, this is a good answer, but here's the best answer, right?
Yes.
She tricks us a little bit, so.
That's right.
All right. A lot of stuff here. I think we got to jump and do our other poll questions, so we get our 7 in here. As we do, if you want to throw this up on the screen again, when we do our Q&A here in just a moment, I'm going to give another quick shout out again next month for those of you that are government contractors. I know many of you are, or you have clients who are government contractors. We're going to be talking specifically about the PPP program, Section 3610, employee retention credits, and all of those other fun things that came out of the CARES Act and the FFCRA. There are some interesting, I'll say, implications for government contractors, particularly around the accurate calculation of indirect rates and preparation of the incurred cost proposal. So I'm going to say, don't miss it. It's really good info, and hope that you will come and join us next month.
Excellent. Well, it looks like we've had about 80% of the audience have had a chance to click in, so we want to make sure we can get at least over 90% response rate for this. So how much help do you need closing your periods? Some of you are saying none, we've got this. Some of you definitely recognize that continuous improvement mindset where a few tweaks would help. And gosh, sometimes a few small tweaks can go a long way to save a lot of time. Hopefully helping to avoid those 8 p.m. evenings so people can get home or unplug for the evening to spend dinner with their family. And if you're still unclear on what to do or you want help, then I think Robert's definitely demonstrated today that he and his team are very, very well positioned to help you with any questions that you might have. So thank you for your responses here, Robert. We're going to close this down in about 5 or 10 seconds, but if you're ready, maybe we can go ahead and dive right into that Q&A with Jenny.
Sure.
Okay, our first question today. Wouldn't commissions be based on actual sales and not accrued sales, so monthly reconciliation will likely end up with a lot of adjustments? Same for bonus, more of an annual account term.
Yes. Again, my default answer there is always go back to one. I would say make sure that you have a clearly written commission policy, and it's one that makes sense. But obviously, whatever your commission policy is, you're going to want to calculate and record that appropriately. Again, I think most companies, anybody that I deal with, commissions are based on sales that are delivered, where the revenue is recognized in that month. But again, in theory, you could have a commission plan that says we pay once the sale is recorded, whether or not it's actually been delivered yet. So it needs to align with whatever your written policy is on the commission itself.
Okay, our next question. You've mentioned completing AR reconciliation, AP reconciliation as pre-closing. The AP invoices and AR invoices are still being processed, so not sure how you could do it pre-closing.
So again, the main thing that I'm driving to there is I'm not so much concerned from an AP reconciliation or AR reconciliation about some of those invoices that would occur in the last few days of the month, right? Because if I'm just entering those, very likely that those are going to be accurate. The point that I'm trying to drive home is that yes, we need to reconcile the AP and AR, and it's very likely that I can do a lot of that reconciliation in the last week of the month. I will say that there are some of the things that we talked about today that in my past we would start the process in the last week of the month, and then we would finalize it immediately after close, because again, maybe we were waiting on something. Certainly your AP AR process could be that, right? You could start both of those potentially on the 28th as an example. You reconcile everything up to that point, and then that way on the 1st of the month, you've only got a couple of days or a couple of items to include into your reconciliation. Again, the whole goal here is trying to pull some stuff to the left in your schedule so that you can complete, as I said again near the just a few moments ago, even if you don't necessarily reduce the overall processing time, if the end of the month is here and my processing time is this, I'm at least trying to shift to the left, right? At least it's my left when I'm looking at it. I'm trying to shift to the left that overall processing time so that I can be done sooner in the next month.
Okay, great. And Liz, I see that we have a hand up in the audience.
All right, well, if anyone has their hand up and you haven't had a chance to type a question in the questions box, please go ahead and do that. That's the best way for us to interact with you on the webinar today. Any other questions, Jenny? Oh, go ahead, Robert.
No, I was just going to say, while we're waiting on somebody to put another question in, we do have our contact info on the screen here. You can find us at leftbrainpro.com. You can download the presentation, get other resources out there. You can see upcoming schedule of events. If you have questions about this topic or any topic around government contract accounting, you can shoot us an email, support@leftbrainpro.com. You can find us on social media. We share a lot of information out there. I will tell you, we're constantly adding new content, articles, blogs, tools, calculators, and I have a few more items that will be coming up as we again work on the PPP stuff in the next couple of months. So be watching for some updates.
Excellent. Jenny, before I go ahead and close, I just want to make sure we have a chance to take any final questions.
I think we're good at the moment. Thank you.
Very good. Awesome. Well, that brings us to the end of the program today. Thank you, Robert, for an excellent topic to start the year. And we want to make sure to invite you to join us next time. So we will be back together on February 16th. Robert will be presenting on the payroll protection plan forgiveness, also indirect rates in the incurred cost proposal. And so that's really like how those things all work together. Very timely topic with everything that we're hearing about the payroll protection program. So we hope you can join us. And then after that, we'll be diving into the incurred cost proposal a bit deeper in the subsequent months. Robert has 3 self-study courses with Incorsa, and they're really just a great way to get started. If you want to go back and review some of the earlier topics from last year, really around the foundations, then you can check out Laying the Foundation for Government Contract Accounting, Fundamentals of Indirect Rates, or Advanced Indirect Rates on the self-study format. And if you use promo code LVP15, then you can get 15% off those programs. So we want to make sure that you can access the content and the topics live, which is what we enjoy most, right? Because we can take your questions and answer to your questions, but Sometimes it's really helpful to be able to go back and do those foundational courses on your own time. So we want to make sure that we're offering different formats available to you. We hope that you'll check those courses out. There will be a course survey when you close the GoToWebinar control panel. So if you want to give us your feedback, Robert and Jenny review that. They take it into consideration. Always is very positive, so we really appreciate that positive feedback too. You can log into your Incourse user account and access your CPE certificate. That will be available in an hour. I heard from just a couple of you that you might have encountered a difficulty with responding to a couple of those poll questions. If that's you and you don't see your CPE certificate in an hour, then you can email support@incourse.com and we'll help you take care of that. The recording for the program will be uploaded later this evening, so you'll be able to access that. And then the materials are already ready to go, and you can download the slide deck from your Incourse dashboard. So we want to make it really easy for you to be able to access your CPE certificate and the course resources into the future. So you can consider Incourse your own personal CPE cloud. Well, thank you again so much to Robert and Jenny for an excellent program. Thank you all for joining us. We wish you a lot of success in the year ahead, and we'll look forward to having you back with us again soon. Until then, take care.